The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Stocks pushing higher with one more big week of catalysts ahead for the year. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele. A whole week? This is 72 hours.
Are you going to be here for the whole week?
Yeah, I am.
Oh, okay. All right.
So I say now. I mean, whatever. Anyway, let's take a look at where the market is, because it is true. It is going to be an interesting week as we end up the year. So the S&P is up by 0.5%, but the breadth is still pretty negative. Every single day in December, we've had negative breadth, and you can see that in the equal weighted index. That's actually a little bit lower on the day. NASDAQ 100, another record high. We're now at 45 record highs for the NASDAQ 100 so far this year. Semi is also the best since November 8th. So you can really see, Romaine, where the rally continues to be concentrated, Broadcom and big tech.
Yeah, and a big point there that you made here about the advance versus decliners here. Not been a good month when it comes to that breadth. And now we just have a little more than 2 weeks left here in the year. And Wall Street actually needs to prepare itself for what is going to be one last big flurry of market catalysts. You have retail sales on Tuesday. You have a big Fed decision on Wednesday and an update on household spending this Friday. Sprinkled in between all of that will be a few late season earnings from the likes of General Mills, Lennar, Micron, Dart, and FedEx, and Nike. And this may be actually the last chance for a broadening of a rally that's really started, well, the year narrow. It fanned out a bit in Q3, but now appears to be reverting back to where it was here at the end of the year. Big tech back out in front on this day and, frankly, over the last few weeks. And why not? The earnings are there, the cash flow is there, and the revenue growth, at least for right now, is still strong. And most strategists say that the earnings and the economic data out there, they've actually been favorable, not so much just to big tech, but actually to a broadening of this rally. You had a report this morning on the U.S. services industry, which showed investors, or I should say service providers, expanding at their fastest pace since October of 2021. In that same report, you saw confidence in the 12-month outlook at a 2.5-year high, confidence that suggests a robust economic upturn that could persist, Alex, into 2025.
So fascinating. Confidence, is that equal higher stock prices? You look at, say, the NFIB versus small caps. Is that the right way of looking at it? Okay, this is taking a look at breadth again in yet a different way. It's the Bloomberg Magnificent 7 index minus the equal weight S&P index. And you can see the divergence there, that the Mag 7 is outperforming equal weighted index by the most in over a year. Does that change? And when does it need to change? So Lori Calvasino over at RBC, Romaine, was saying, like, look, we really need earnings and stronger economic growth to finally get value to start to outperform. And in the meantime, when you don't get that, is it just going to be the Mag 7 all day?
Yeah, and I thought we had some of that strength when it comes to earnings and the economic activity. Let's get some insights out of our first guest as we kick you off to the close here on this Monday afternoon. Tony DeSpirito joins us now here in Studio 2. He's a managing director and the global chief investment officer of fundamental equities with BlackRock. Great to see you, Tony.
Great to be here.
This whole year has kind of been a weird year. We started off with a very narrow rally. It kind of broadened out for a few months, and now it's kind of narrowing again as we get to the end of the year. And a lot of questions about whether 2025 is going to be a repeat of that Mag 7 leadership or a much broader sort of set of participants in the rally.
I think we're going to see greater breadth next year. And up until recently, that's what we were seeing. And the reason for this is both fundamental and valuation. You know, on the fundamental side, if you looked in 2023, for example, the earnings growth gap between the Mag 7 and everything else in the S&P 500, that was 37%. Wow. Throughout the course of this year, that gap has been narrowing. And if you look at estimates for next year, that gap in earnings growth is around 10%. So it's still more earnings growth than Mag 7. But what's interesting to me is the valuation gap hasn't changed. And that valuation gap is still really big.
Well, that's what I'm curious about. When we talk about that valuation gap, you have confidence that closing that gap is going to be a catch-up of the lower valuation names rather than the big valuation names basically losing a step.
Yeah, I think that's right. Yes. Yeah, I do think that's the way it'll go. And that's because the rest of the market's earnings growth is going to accelerate from here.
But what happens if we get like a hawkish cut on Wednesday, or the trajectory for rate cuts next year kind of falls off the map? Does that change that ability for the rally to broaden out?
I don't think so. I'm actually expecting a hawkish cut. So that's what I would expect. And why is that? Because the economy, the underlying economy is so strong. You see the business confidence picking up. You see that there's a lot of home equity and wealth building up. All this is very stimulative. And so if the Fed is going to be more hawkish, it's because they see the strengthening of the underlying economy. And that's good for earnings breadth, the strengthening of the underlying economy.
So if I gave you an option of like what's going to lead 2025 equities, is it going to be animal spirits, or actual fundamentals? You would pick fundamentals?
I think it's fundamentals. I mean, I think we've seen the animal spirits piece.
Okay.
Now we're going to see this fundamentals follow.
So when we talk about kind of how you position as an investor, and this is probably more targeted towards more of the retail side rather than institutional side here, is there sort of a rebalancing or a refocusing that investors need to do going into next year? Basically, if you're not in a position or if you're moving out of a position, how do you change heading into 2025?
Yeah, so I think there's a real opportunity for investors to rebalance their portfolios. I mean, if they haven't done anything, it's likely they're very overweight growth, right? If you just take growth and value, growth has outperformed over the last 2 years. If you were balanced 2 years ago, you're now out of balance. So this is a good opportunity as the market broadens to get back into balance. Even then, I would say the S&P 500 itself, even if you're in a core index, you think, okay, I'm in a core index. Well, the S&P 500 has become more growthy over time. And so even then, I think it would be healthy to supplement that with value.
This is going to be maybe a bit of a loaded question, but is the S&P still the best representation of the broader market?
Yeah, so I do think there's some challenges. I don't know what's better, but I think there's some challenges. I think the market, the S&P 500 is no longer large cap. It's actually become mega cap. It's become a lot less diversified, both in terms of the number of stocks.
Yeah.
You know, the top 10 stocks make up 35% of the index, but also the sector concentration has grown dramatically towards tech. And so I think for those reasons, it's become a more challenging benchmark. It's no longer as broad-based as it used to be.
So you make a distinction sort of when you look at mega caps versus large caps, right?
Yes.
What's the way to then invest in large caps?
Yeah, so and let me explain the point. If you look at the S&P 500, the weighted average market cap is just about $1 trillion. You know, let's pause on that for a second.
Wow.
$1 trillion. If you take out the Mag 7, that falls to about $225 billion. You take out the top 10 stocks, it falls to $125 billion. So I kind of think about $125 billion. That's historically been the sweet spot for large cap investing. I think there's a lot of opportunity there. One way to pursue it is through active management. Another way to pursue that would be through the equally weighted S&P 500 index, which does have that much lower market cap.
Which the SPW versus the SPX. We've seen, though, the underperformance at the end of the day. Do we close the gap, and how? I mean, I know you've been harping on the economics and the fundamentals, and it's going to happen, but I feel like I've been hearing that on a valuation basis for a long time, and it still hasn't.
Sure, it's a fair point. But over the long course of history, they've performed neck and neck. That valuation gap is now wide. It's about 25 percentage points. That's at the high end of that history. So I just think it's about rebalancing. It's not about going whole hog away from the S&P 500, but it's just about making sure your portfolios are appropriately balanced. So I think that's the important point. It's about risk reduction as much as it is about enhancing returns.
On the point of risk, at least when in the context of equities, are you anticipating more volatility next year?
I think volatility is the right thing to expect. I mean, if nothing else, the index has become more concentrated. If I show up with a more concentrated portfolio, you'd expect it to be more volatile. And so same too of the index. We haven't seen that volatility really, other than some small bouts like this summer. But I would certainly expect going forward that you'd see more volatility, yes.
All right, great stuff, Tony. Great to have you here in person, in studio. Tony DeSpirito over at BlackRock, the Global Chief Investment Officer of Fundamental Equities there, kicking us off to the close here on this Monday afternoon. When we come back, we're going to talk about the allure of Bitcoin becoming a little bit too big to balk at. We're going to talk about why longtime skeptics are finally crossing over to the dark side.
Plus, slumping office property values are starting to ripple through some U.S. banks. We're going to get a nice temperature check here on the health of the commercial real estate with longtime developer Miki Naftali. Miki Naftali, Chairman and CEO of Naftali Group.
And of course, he's a big presence here in New York City. So who better to follow that up with than the mayor of the country's largest city? Eric Adams going to be joining us in just a bit. All that and more coming up in a second, right here on The Close on Bloomberg.
Bitcoin's record run continues, hitting yet a new record high today of more than $107,000. These record highs are attracting yet a new wave of first-time crypto investors who are drawn in by the promise of high returns, with some seeing crypto as a hedge against economic volatility. Joining us now to discuss is Bloomberg's Claire Ballentine. Did I say it right?
Yeah.
Okay, great. Cool, this is going well. Okay, Claire, so who are these new investors and why are they coming in now? And is it all about President Trump and the promise of less crypto regulation?
Yeah, so the story started out with just a question of, is there anyone who is going to invest in crypto that hasn't already?
Right.
And it turned out there's a lot of people, and many of them are drawn in by sort of the fervor around the election. They think President Trump is going to be great for Bitcoin. They're also seeing this giant rally, and they're thinking, okay, maybe this is the time to finally try it out.
Are they institutional, in family office, hedge funds? Like, can we pin down kind of where the most interest is?
So the ones that I talked with for this story were all just regular people, retail traders. Some of them had never, were skeptical of crypto. They saw the FTX scandal and all of this, and then now they're sort of deciding to sort of tiptoe their way in. But we can see from fund flows, looking at Bitcoin ETF inflows, that the interest is coming not just from retail, but also institutional.
Well, let's talk about some of the examples, because I thought it was interesting. A couple of people you cited in your story, not so much that they're in crypto, but the rationale for it. So, yeah, one guy basically says, well, if Trump does well, crypto should do well. And I was like, oh, wouldn't it be the opposite? Then you had another guy who's like, well, I'm not a fan of Trump, and crypto will basically be a hedge against some of the madness that he might bring. So which is it?
It's all of them.
Yeah.
I mean, if you want to, you can find a reason if you want to invest in crypto.
Yeah.
The reasons just ran the gamut. And so, you have some people thinking, Trump is going to cause volatility. I'll invest in crypto as a safe haven. Others that say his administration is going to be great for crypto, so I might as well get in now. Yeah,
there's a broader question here, too, when we talk about people coming in. And there's this idea that some of these people could be left holding the bag. And we've kind of been through bouts of this, not just with crypto, but with other sort of risk assets where you have all the big players are in it, the big whales, they make enough money off of it. Then the hype train comes in, retail investors come in, and then boom, you get the rug pull.
Yeah, it's never a great idea to invest when things are at record highs. But I think the rationale here is a lot of people are saying, it's going to go up even more during Trump's administration. And this was surprising to me. Some of these people invested on election night. Since then, Bitcoin is up more than 50%, which is crazy.
That's what's so weird, because usually you're going to want to buy low, sell high, right? I feel like with Bitcoin, it's exactly the opposite.
Yeah.
So you want to buy high and sell low at the end of the day.
Yeah.
Do we think that actually winds up continuing as we go into a more volatile time? Like, do we know if crypto is a good hedge against economic volatility?
I think it's mixed. I think the jury's still out. I think for some of these people, they're banking on that, and more than anything, they're thinking, if this pro-crypto administration is coming in, you see Trump appointing people who are in favor of crypto, working so closely with Elon Musk. They think there's more tailwinds for crypto.
Do we know anything about a Bitcoin stockpile? Is that a thing? Is that going to happen? Can you do that when there's so much volatility in the price?
I think there's more questions than answers on that one. I do think that's something that people have mentioned as being a reason they think, Bitcoin's price could go even higher. Whether Trump can do that or not is still kind of open, but it's an idea that's being floated.
Well, a lot of the rationale, at least among the smarter people who think we're going to see an appreciation of price, seems to be tied to this idea of obviously just the supply-demand dynamics of crypto overall, obviously a relatively, I guess we can call it finite supply. And the idea that as more people come into it, it sort of pushes it up. Of course, if this was a stock, we have a word for that. It's called multiple expansion, and there's nothing supporting it other than just the hopes and dreams of selling it at a higher price to someone else.
Right, exactly. But if you look at some of the data shows that only about 17% of Americans own crypto. So I do think there's this element of, these people are looking at this and saying, if all these new time investors come in, that can boost the price as well.
All right. Claire Ballentine, great to have you here on the program.
47th time I got it
right. A great article today talking about some of the newcomers to the crypto space in anticipation here of what the Trump administration might mean for the digital currencies. When we come back, we're going to take a look at shares of Brown-Forman. This is the maker of Jack Daniel's whiskey. You're not a whiskey drinker, are you?
Not. I really want to be, though.
Well, guess what? Not a lot of other people are as well, particularly Jack Daniel's. I was actually just at a restaurant recently with someone. He ordered Jack Daniel's. They said, we don't carry it.
What?
I said the same thing. I said, who doesn't carry Jack Daniels? But I think our next guest in our Top Calls segment, he can answer exactly why they're not carrying it. That's part of our Top Calls. It's coming up next, right here on The Close on Bloomberg.
Just some breaking news for you. We've now learned that TikTok has now asked the U.S. Supreme Court to block the ban as the deadline looms of January 19th. Now, remember, also today in a press conference over at Mar-a-Lago, President-elect Donald Trump says he will reconsider a ban on TikTok, reversing his previous stance against the Chinese-owned app. So we will look for more headlines as they cross. TikTok asking the Supreme Court to block a ban as that deadline looms. Romain?
All right, let's get now to our top calls. This is where we take a look at some of the big movers on the back of analyst recommendations. We're going to start off today with Macy's because Gordon Haskett upgraded the stock to a buy. The analyst saying upbeat business trends at the department store chain, instilling a sense of confidence that Macy's can deliver positive same-store sales in the current quarter for the first time since 2022. Help from colder weather, and he says recent activist pressure creating a floor for the stock over the next 6 to 12 months. Shares up 2%. Next up, Ford, a downgrade to underperform. In fact, it's at least the fourth cut to a sell equivalent rating by Wall Street in the past month. Jefferies doing it this time, citing inventory overhang, questions on a yet-to-be-announced electrification strategy, and decisions about Ford's presence in Europe. Ford shares, wow, down 4%, back below $10. And finally, let's take a look at Brown-Forman, the spirits and alcohol company, losing its buy rating at Truist. The analyst saying Jack Daniel's whiskey, which accounts for more than half of the company's sales, has lost its premier luster with U.S. consumers. Unless Brown-Forman revamps its marketing efforts, he says Jack Daniel's will continue to underperform. Those shares down about 2% on the day. Pleased to say that the man behind that last call joins us right now. Bill Chappell is managing director over at Truist Securities. And Bill, this has kind of been something that's been bubbling up for a while. We've heard a lot how some of these legacy liquor brands weren't doing so well. And I'm wondering if that's because there's just so much more competition right now in the whiskey space than there was, 20, 30 years ago.
Yeah, thanks for having me. I think that's exactly what's the case. But the difference is, over the past 4 years, haven't been able to really tell who were the winners and who the losers were, because so many of us were locked down at home and had imbibed on a few more spirits from 20 to 2022, and then destocked from 23 to 24. And now we're starting to see kind of a normalized trends in spirits and beer and other things. And you're seeing who are the winners and who are the losers. And yes, I think certainly you've had all kind of premium and super premium brands in American whiskey pop up and gain the consumer's attention. But it's also, I think Jack Daniel's hasn't done much to maintain its luster. And that's going to hurt them for the long term.
Well, that's what I'm curious about, whether there is a turnaround potential here, because a lot of this is marketing. I mean, I drink my fair share of whiskey, and I can tell you, it's like, a lot of this is marketing. I mean, the quality of it for a lot of this doesn't vary a tremendous amount. It's just who markets better than the others. So I don't know, if they get a better marketing person, a better marketing team, can they turn this around in a year or two?
Yeah, I think it's a longer fix, and it's because it was a longer problem. It's not just that these small startups have gained attention. It's what Jack Daniel's has done as a brand, and a lot of it's come from marketing. I mean, think about 7-8 years ago, they came out with Tennessee Honey and Tennessee Fire, which is a cinnamon based, and that's a much more broader audience that you're going at, but it takes away a little bit from the brand. The other thing that's really picked up in the past few years is ready to drink, such as Jack and Coke in a can. And, as my dad used to say, it doesn't really matter what bourbon you drink if it's mixed with Coke, because at the end of the day, it just tastes like Coke. And so those are the type of things that, that kind of hurt. And I would say you could go to a lot of consumers. The other thing is Jim Beam, which is owned by Suntory, has done a lot of marketing and advertising, especially at the younger consumer. And so I'd say a lot of 21 to 25-year-olds, if you told them, tell me the difference between Jack Daniel's and Jim Beam, they just say the name, and that's a problem, because they're different price points and different tastes. And so I think it's a lot of work they have to do.
Bill, also on the conference call for Brown-Forman, they talked about tariffs and how they're having to think about what their imports are going to look like, what their inventory is going to look like with the threat of tariffs. Is that a specific Brown-Forman thing, or are you hearing that from other companies that you cover also?
It's specific to the American whiskey industry. And when I say that, it's kind of the poster child of what to tariff against the U.S. It's all made here in the U.S. It's 50% of Brown-Forman's business is outside the U.S., so they're exporting it to Germany into UK, into Australia, into other places, not really China actually, and they're just coming off of major tariffs out of Europe that rolled off 3 years ago. So I think that's the worry at the whole industry. And it's not because anything they're doing is just seen as a retaliatory way if the U.S. steps up its tariffs. And what we talked about in the note today is I have no idea how, and I think they can navigate through it like they did in the past, but it's an overhang for the stock until we do have some clarity, which probably takes 6 to 12 months.
How much of that do you think is the overhang for the stock? I'm just looking year to date. It's off by 23%. How much of that do you think is a tariff situation?
I think a lot right now. And if you kind of look at the chart this year, the stock started to, as the overall category started to stabilize post-pandemic in June, July, the stock started to rebound. And then turned southward again as we passed the election. So I think tariffs are front and center to investors' minds, and this is where it isn't just for Brown-Forman or spirits. I think it's for all of the consumer goods, especially the ones that have big imports or big exports, like American whiskey is.
I am curious. So on that tariff issue, though, when we talk about, and obviously we don't know what those retaliatory tariffs could look like, but for those brands that are heavily reliant on exporting from the U.S. to overseas here, would there be any sort of reprieve? Is there sort of any way around this, or they're just going to have to just deal with the added cost?
They deal with the added cost. So last time, and again, give you more color on why they did it. Last time the EU did a 25+% tariff on all American whiskey. Who does that help? That helps Scotch makers that they're competing with, because now American whiskey is higher than Scotch. So, and what Brown-Forman did last time is they just sucked up the cost. They didn't pass it off to the consumer because they didn't want to lose share. They'd probably have to do the same thing again if meaningful tariffs come through.
Right, hence the whole tariffs can be inflationary scenario. All right, Bill, thanks a lot. We really appreciate it. Bill Chappell over at Truist. Some more breaking news for you. Justin Trudeau, the Prime Minister of Canada, has named Dominic LeBlanc as the Finance Minister. Dominic LeBlanc is a Canadian lawyer and politician. He currently serves as the Minister of the Public Safety Department. And this comes on the heels of the previous Finance Minister resigning quite suddenly from his cabinet over differences over how to prepare for the Trump administration. She cited aggressive economic nationalism as one of the reasons why she quit the post. All right, coming up, a conversation with the mayor of the financial capital of the world, Eric Adams. This is The Close on Bloomberg.
Just about 3:30 p.m. here in a rainy New York. We want to welcome our TV and radio audiences to The Close. I'm Romaine Bostick.
And I'm Alex Steele, and thank you for joining us for this special cross-platform coverage as we take a deeper dive into the city that Wall Street calls home, New York City. Joining us now to discuss everything impacting New York, from crypto to immigration to a potential pardon from President-elect Donald Trump, is Eric Adams, Mayor of New York City. Mayor, we have a ton to get through. Thank you so much for taking the time. We know you're quite busy. Want to start on the topic of immigration in particular. New York City is a sanctuary city. Does that get reversed anytime soon so the NYPD can help deport immigrants?
And it is so important. That term has been thrown around without any real understanding and meaning of it. The sanctuary part of it is to state to immigrants, undocumented, and whomever that utilize our services. Have your children educated in schools. Call law enforcement if you're a victim of a crime. You have a right for medical care. That is what we believe in. And what the problem was is that this was in place since Mayor Koch, Mayor Bloomberg, but the changes that were made under the previous administration that prevent law enforcement and any city agency for collaborating with ICE for deportation reason, I just don't believe that. Those who commit serious violent crimes, we should collaborate with ICE to make sure they are not on our streets committing threats and dangers to migrants, asylum seekers, and everyday New Yorkers. Okay,
so Mayor, that's a yes to revamp the sanctuary laws, if I'm hearing that correctly. Now, you met with Trump's border czar last week, if I'm also remembering correctly. What have you both discussed? What is the roadmap going forward?
To collaboration. I've stated it from the beginning. I was talking about this even prior to the election. It's about public safety to me. And we're going to sit down with our team and his team and work out the plan of dealing with those who are dangerous and should not be in our city or country.
When we talk about, though, the methods that will be used. There was a lot of hay, of course, made about your meeting last week with Tom Homan, the cooperation that you will have to have one way or another with the Trump administration. As you know, Mayor, a lot of the issues with the first Trump administration and the way that they dealt with undocumented immigrants wasn't so much the kicking them out, but it was a lot of the methods used to round them up here. Will you be cooperating on the roundup part of that?
Well, I think that the border czar would articulate exactly what their methodologies are and how they're going to operationalize what they want to do. In the city, we're clear. And I want to take all the anxiety away from our migrants, asylum seekers, and undocumented individuals. Continue use the service that your tax dollars are paying for. I am zeroing in on those who are committed repeated violent crimes. I said this over and over again. And let's be clear, the American public have communicated loudly and clearly. We have to fix our border. We have to keep dangerous people out of the country. And that is why they voted for this president to do so.
They certainly did. But according to a Siena poll, a lot of those people also voted not just to deal with the violent immigrants, but pretty much all. And some of that has to do with the budget pressures on this city as a result of all those folks coming in. Almost $7 billion spent just since mid-2022 on shelters. Tens of thousands, hundreds of thousands of migrants still in this city using city services. Can New York City afford that?
No, they cannot. Like you indicated, $6.5 billion. You know what I could have done with $200 million of that? I could have gone after those chronically absent young people. Hundreds of millions of dollars we could put into our older adults. These were taxpayers' dollars that were used for a national problem. The White House only gave us roughly a little over $200 million as $6.5 billion. And we can't. Look at what's happening to Chicago, Denver, Los Angeles, all of these big cities that had to take on this crisis. It was wrong, and we need to make sure that it doesn't continue to happen.
Did you have to take in all those migrants, Mr. Mayor? There was a lot of questions, particularly on some of those migrants being either bused here or shipped here, rather than them coming here voluntarily. I mean, there were some mechanisms in place where you could have turned those folks around. Why didn't you?
No, and I'm so glad you said that, because that was one of the most misunderstood. People would stop me every day on the streets and say, wait a minute, what are you doing to us, Eric? I had no authorization to stop the buses from coming in that would violate federal law. I had no authorization not to give them a place to sleep, 3 meals, and the other amenities. That's against local laws. And I had no authorization to allow them to work. That would violate federal law. I couldn't even allow them to volunteer and give them a stipend to clean streets, remove graffiti, and other services. The federal government said, no, you cannot, Eric. So, no, we did not have any other choice. We were successful, though. Out of those 220,000, 170,000, we were able to allow them to go on the next step of their journey. They're no longer in our care. They're no longer being paid for taxpayers' dollars because we took the right steps.
So let me just clarify for a second. So when we were talking about the New York City sanctuary laws, that would be for undocumented criminals, right? But then what about these people that we're talking about who are bussed in, who are still on a New York City payroll? What happens to them?
I didn't quite understand your question. You said the sanctuary law is for anyone that's in the city that's not documented, stating you have the right to use taxpayer services. When an undocumented person walks in the store and buy a loaf of bread, those taxes he's paying if he's documented or not. So you should have the right to use the services that your tax dollars are paid for. What I am saying, those who are committing repeated violent acts, they should not be in our city to be released on our streets to continue to carry out those violent acts against longstanding New Yorkers and migrants and asylum seekers.
Yeah, I guess my question was distinguishing that versus like the families that I see in the subway who are undocumented but clearly not a harm to society. What are you going to do about them?
We want to give them the services they need.
But we can't afford it, right? But you just said we can't afford those things.
No, we want to give them the services they need and show them the next step on the American journey, like other immigrants. Immigrants have come to this city for hundreds and hundreds of years. I don't care if it's the early Irish that built our subway system, the early Italians, the early Caribbeans. Immigrants have always come to this city, but they found their way. And that's what we did to 170,000 migrants and asylum seekers. The city cannot pick up that tab. We need to put them on a pathway to find their way to pursue the American dream.
All right, Mr. Mayor, I do have to ask you about the federal investigations and the indictment against you. First and foremost, do you plan to follow through on running for re-election?
Yes, I am. I made that clear over and over again. People stated, Eric stepped down, those small number of people. I stepped up. Look at the numbers and what we've accomplished in the city, particularly for someone like Bloomberg Station. We have more jobs in the city's history. We brought down crime. Our office employees are back to work. We continue to break records after records. I can do my job. My legal team is going to handle the case.
Well, okay, they'll handle the case, but is that not a distraction? And what if you lose the case?
Look at you said it's not a distraction. Look at the number. People said it was going to be a distraction. I'm moving forward, and I'm going to continue to deliver for the people of the city of New York. We just passed the most comprehensive housing reform in the history of the city. And I'm not going to speculate because I'm not going to lose because I did nothing wrong. Yeah. I got a great legal team, and they're going to handle the legal proceedings.
What does the team around you, I'm not talking about your legal team, what does your administrative team look like right now? You've lost a lot of folks. You had another top advisor, Ingrid Lewis-Martin, resigned today with her lawyer saying that they think that she will be indicted as well. You've had to dig deep into the bench to find a new police commissioner. I mean, who's left around you that is competent, that is capable, that can see out your vision if you are reelected?
Well, let's first look at what we have done that shows our level of competency. As I indicated, from our employment to our housing success to bringing down crime, we didn't have to reach deep into our bench. We had a large number of people who wanted the coveted job of being the police commissioner, and I picked the right person based on all that we have. All of my deputy mayors but one left. So when you talk about large number of people, we have over 300,000 city employees that are getting up every day doing their job. There's some sensationalism by those who decide that they wanted to move on with their lives. But when you look at my deputy mayor, Ann Williams-Isams, Mayor Joshi, my chief of staff, they're still in place doing the job that we ask them to do. Difficult times come, but what could you do to overcome them and continue to move the city forward? And let's face it, we have been doing just that.
Mayor, we heard today from President-elect Donald Trump at a Mar-a-Lago press conference that he would consider potentially giving you a pardon. Can you confirm that your lawyer has been in contact with the Trump administration on that?
No, I cannot confirm that. My lawyer's handling the case. The president also stated that he felt I was unfairly treated. President Biden stated that his Justice Department has been politicized. President Trump said that. I said that. A large number of Americans who have been a victim of this politicizing of the Justice Department. We have adults in this country that were placed on the FBI watch list because they were advocating for their children and families. So I'm just reiterating what President Biden stated about his Justice Department. So my lawyers will look at every avenue to ensure that we get justice. I should not have been charged. I did nothing wrong, and I'm going to continue to lead this city.
So just inferring here, if you are offered a pardon, you will take it?
There's no inference. But I was very clear in my response to you. I have an attorney that's managing, ensuring that I got the justice that I deserve, and he will handle that. And if you have any questions, you should give those questions to him.
All right, Mr. Mayor, one final question for you.
Yes.
And this is really just about the health of the city. Of course, we all remember just how hard the city was hit by the pandemic. Anyone walking around, particularly in Manhattan, you can see it's come back in a big way, but it's not quite there. We've been having a lot of conversations with economists, with business leaders, with Wall Street, with real estate developers, all saying that there still is a lot more work that needs to be done to get this New York City economy back to where it was pre-pandemic. What types of assurances or promises can you give to some of those folks here that we are on that path?
And that's a great question. It's difficult for people to believe we're probably just 2 years out of COVID. where the city was shut down completely. 2 years. More jobs in the city history. Those who determine how well a city is being managed, we call them bond raters. They raised my bond, and then they doubled down on the fact that it should remain raised. You're seeing business leaders across this city talk about the relationship they have with City Hall and the collaboration we have together, and we're going to continue to do so. So within 2 years of coming over, the city being shut down, we have returned to the greatness that we looked at, fourth largest tourism in the history of the city, continued decrease in crime. What our business leaders have told me, Eric, we need to have jobs up, crime down. That's what we've done. Case closed. We're moving in the right direction.
All right, Eric, we have to leave it there. We're going to catch up with you next year and see if some of that still stands. Of course, Eric Adams, he is the mayor of the financial capital of the world right here in New York City. And in addition to being the financial capital of the world, this is, of course, also a huge, huge real estate market. And our next guest knows more about it than almost anyone else. He's assembled a portfolio of at least 25 condominium projects, luxury condominium projects here in the city. Joining us right now here in Studio 2 is Miki Naftali. He's the chairman and CEO of the privately owned global real estate development and investment firm, Naftali Group. Miki, great to see you.
Thank you for having me.
How's business these days?
Actually, quite well. Quite good.
When we talk about what this city went through, I mean, you go back, even before the pandemic, there were struggles. Obviously, the pandemic just changed a lot. You walk around, at least on the surface, it appears like things are back. You have much more of an insider's view into what's going on. Is it back?
It is back.
Yeah.
And let me tell you something. We opened 10 weeks ago, we opened 3 sales offices in different neighborhoods in New York. Williamsburg in Brooklyn, Upper East Side and Upper West Side. So different demographic, right? The 3 sales offices, and we're selling over $1 billion. The 3 sales offices are doing extremely well. There is not much inventory. There's a lot of demand. And I think you see it, so you see it in real estate, you see it in restaurant. Try to get a seat in, to get a reservation in a restaurant. The city is back.
Some of those projects, though, that you mentioned, they were kind of already in the pipeline.
Right.
How hard is it to start a big development project like that today, given the regulations, given the political climate, given the cost of capital?
It's very difficult, and the biggest problem is the capital market. The commercial lenders are very selective, and many developers, many investors cannot get financing, especially for development, construction financing. So, you see less competition. We see less competition. For us, it's actually quite good because we can do what we want to do, what we know how to do. But some developers can just not get financing.
What's not working right now for you? Like, we keep getting people in who say it's really awesome. It's not good for those guys, but I'm doing really well.
No.
But within your portfolio, like, where are some cracks that you're managing?
So I would say what is very surprising is actually for me is that the New York market, the portfolio in the New York market is doing very, very well. We have 2 mega projects in South Florida, in Miami and Fort Lauderdale. When, if you would ask me a year ago, I would say probably South Florida will do better than New York. And it's actually slightly the opposite. Not that they're not doing well, but New York is selling extremely well. And South Florida, just before the election, slowed down. In New York, we didn't slow down. I mean, the day of the election, we had multiple people in each and every sales office. In South Florida, we slowed down before the election, and now it started to come back.
That's interesting. What do you think that the impact of rate cuts have at all on this perspective? And I say that because, maybe we get a cut on Wednesday and that's it for a little bit. We get that hawkish cut. Right. What does that mean for you and your sales team?
So I would say that usually the very high end of the market, the very wealthy people, really don't care much about it. They also understand that it's actually a bridge loan. Because, you buy an apartment, you can refinance in a year or 2 or 3. It doesn't cost you much, right? But the entry level, it's much more important because every dollar counts, and the highest the interest rate, the highest the mortgage payment, it's more difficult.
I am curious about who these buyers are for some of these properties. Are these pretty much local people, meaning either not just New York, but just basically U.S. citizens, I should say, or are you seeing more foreign demand? Because that kind of tapered off as well during the pandemic.
Right. So I would start with New York. New York, those 3 neighborhoods, mainly U.S. buyers.
Okay.
Mainly U.S. buyers, many New Yorkers, but we also see we also see buyers that are, for example, moving from the West Coast because of political, issues. They are moving to New York and outside of California. When we speak about Miami, for example, we see a lot of Latin Americans buying. We see European that are buying. And we now start to see actually Northeastern buying as well.
On the Miami front, be honest. Are all those people who moved to Miami from New York, they're coming back, aren't they?
Oh, absolutely.
Yeah.
They're coming back because they can't get their kids into school.
By the way, this is the biggest problem in South Florida and Miami is the education. By far the biggest problem. But it's really not about that. When you look at Miami, Miami is not only, it's not, if New York is not, maybe is not doing well, Miami is doing well. No, Miami became like at a point of no return. People really want to live in Miami or want to live in South Florida, not only in the winter month. There is everything, almost everything you want. Not the same as New York, but there's a lot, Miami has a lot to offer. Yeah. So it's very interesting. We see more and more people moving to Miami from different states and from overseas.
What's the new Miami right now? So what I mean by that is, if you said Miami was going to be more popular than New York a year ago, what's going to be that call in a year from now?
No, I wouldn't say more popular, but you know what? Look at the rest. For me, set aside real estate, look at restaurants, right? Compare the restaurants today in Miami versus 5 years ago. It's a completely different ballgame.
Right, so what's the new Miami?
The new Miami, to me, is head-to-head competing with New York, and to me, it's a great competition. It's a perfect competition. New York is great, Miami is great. Both can do very well.
Okay, what location in the country could do as well or really be a surprise to us over the next year that could do well?
I don't know.
Nashville. I'm throwing some.
Maybe we are actually financing a rental property in Nashville for another developer, and they are doing well. They are leasing the units. But I focus mainly on the north and southeast, and those markets are doing quite well.
We only have time for about one more question, but I am curious too about this idea of office conversions. We've been talking a lot about all the stress in the commercial real estate space, whether some of those older buildings can find a new life. I've seen some pretty creative things, particularly in Chicago, even up in Canada, in Vancouver. Here in New York, I don't know, are we seeing that at all? I mean, I remember when you bought the plaza and you ran into a lot of issues because you decided, why does it just need to be a hotel? It could be all things. And you managed to pull that off, though I'm sure you went through some pain to do it. But are you seeing more, not just you, but are your peers and other developers in the city, are they finding opportunity to do that, or is it just too hard?
So there's a lot of hype around the conversions. Yeah. And between 2000 to 2007, I converted a lot of buildings in New York from commercial to residential. I have to tell you, back then, those made a lot of financial sense, so that's why we did them. At least at this cycle, and probably we missed one or two, we didn't find a conversion that makes really sense, because those buildings, most of the office buildings, are very big. The floor plates, each floor is very big. For residential, you need light and air. Every bedroom has to have light and air. There is a distance, and I'm not going into too many details.
No, I gotcha.
But the bottom line, those conversions are not easy, and we need more and more support from the state and the city in order to convert those buildings. If not, those buildings are going to be empty for a while.
All right, Naftali, Miki, great conversation here. I hope to have you back. Miki Naftali, he's the chairman and CEO of the Naftali Group. All right, Alex, we are just, about 10 minutes away from the closing bells. This goes by fast, right?
It does go by
and we
so
talk
fast.
about a record high right now on the NASDAQ. The S&P not quite there, though it looks like it's getting back to the lows of the day. And then you got crypto also at a record high today. Put that together and tell me what that all means.
I don't know what that means. You have the Russell outperforming along with big tech. I really couldn't tell you. Which raises the question, is it just animal spirits, or is it something more fundamental? And can we take any price action seriously until January 4th or 6th?
And I think that might be the key here. I mean, obviously you have some people who are going to stick around because they want to hear what Powell has to say on Wednesday. You have a few earnings, but for the most part, a lot of people are checking out. And it might not be until that first full week of January that we start to see a true price discovery.
Exactly. So we'll, but stand by. Watch our show every day.
All the
way until that Monday.
Oh, absolutely. and beyond, of course, because you want to know why? Because we have the best guests.
We do.
Alex Steele, as we count you down to the closing bell, and one of those guests joins us right now. Janasiewicz is joining us. us. He's a portfolio manager and lead portfolio strategist at Natixis Investment Managers Solutions. Jack, thanks for being here on the program. We started off the program talking a lot about how this year started off with a very narrow rally. We got a bit of broadening in the middle of the year. Now it's kind of narrowing again as we get towards the end of the year. Is there any hope that broadening of the rally, where we see a lot more participants, that is in store for 2025?
Sure, and I think when you start to look at what's been going on this past week, and as we probably go into the end of the year, it's tough to really read into a lot of things because liquidity is going to be going down. You've got some window dressing and a lot of other, technical things, I think, that wrap up the end of the year. So I think as we head into the second part or next year, I think you'll start to see some of that shift once again, right? And I think what makes sense in here is still a barbell trade. You still want to have some of that exposure to the Mag 7, but you also want to, I think, own what we call basically some of the cyclical value names, which are going to be included in financials, industrials, and to a lesser extent materials. But I think that helps at the underneath the surface to see a little bit of that broadening out. But it's more, I think, of a barbell trade that investors should be looking at as we head into the early part of 2025.
So as those investors try to create a playbook, and we should be pointing out this is going to have to be a playbook that is in line with some of the Trump administration policies. Now, we have, of course, the fortune of having been through this before. And I am curious whether you're seeing parallels in 2025 from what we saw in 2017 when Trump took office for his first term.
I think when you look at the leaders right now, the so-called Trump trade, so things like, U.S. exceptionalism, so U.S. equities over rest of the world, small caps over large cap, strong dollar, yield curve steepening, the list goes on and on there. Those are basically taking the hint from the 2016-17 Trump 1.0 playbook. But I think the key difference, though, is the starting point, right? And we're coming in at much higher levels, right? You're coming in with a 10-year that's closer to 4.25, where back then you were probably sub 2. You're looking at a Fed fund rate that was moving off the lower bound, so closer to 75 basis points. Today you're looking at 475, multiples a lot higher relative to where we were, 4 or 5 years ago. So the point being here, you had plenty of room for the market to start to absorb theoretical tightening of financial conditions back in 2016-17. Today, you don't have quite that same room here. So I think there's a little bit of a difference. It's really that starting point, which gives you a little bit less margin for error today.
But on the flip side, we have rate cut cycle versus the rate hiking cycle of 2018. How does that then support your thesis?
Yeah, and listen, I think the key here is simply that the Fed is easing. So the key here is simply that starting point, again, from a growth perspective, right? We're coming in and probably going to slow in the first half of next year, but you're slowing from a very elevated level. And those rate cuts will be marginal at best, and you'll probably continue to see the Fed taking that sort of, data dependency outlook. So you're going to have those 2 or 3 cuts. I think the market's right in pricing that in. But I think we're going to be slowly easing back towards trend levels, probably settling a little bit higher than trend, which will still be supportive for corporate profits going forward. And that's the key.
So that's such a great point, Jack. So you're very realistic in maybe 2 to 3 cuts maybe from now until the end, right? That's the cycle. Where do we see the most volatility, though, as the market re-rates for that?
Sure, and I think it's still going to be coming in the fixed income market because I think you still have plenty of things that are still uncertain, right? We hear a lot of concerns about the level of issuance coming, right? The fiscal deficit concerns. We're certainly not seeing the potential to address that deficit going forward. I'm hearing concerns about inflation starting to reemerge itself. Again, are we talking about 2 or 3 cuts? If we're going to have to see those get priced out if inflation is reemerging, or are we starting to slow to a point where the labor market's beginning to crack? So I think the bigger issues still reside in the fixed income market. And so that's where I think you're still going to see probably elevated volatility relative to what we've seen from a historical perspective.
And can you bank at all at this stage right now, Jack, on any sort of direction for rates, a meaningful direction, I should say?
When we think about something like the 10-year, for example, we're still expecting to remain in a range, right? And why is that? Well, again, we're slowing from a higher level of growth, and I think you still have the Powell put in place. So if we do get a market deceleration in the labor market, the Fed's going to react accordingly by probably upping their rate cuts. You also have a president that's going to have one eye on the stock market, so you could also argue there's a Trump put. So that, I think, puts a floor under growth. And by putting a floor under growth, probably puts a floor on how much the 10-year can rally. The flip side, though, is if you start to see the 10-year pushing up toward closer to 5, you're going to have that self-governing mechanism in here where the market's probably going to throw a fit. You're going to have an equity market correction. You're potentially going to see growth downshift as a result of that. And treasuries are going to come back into vogue because your markets are going to be concerned about a slowdown. So, we're expecting a range trade, 4%, 4.5%, and we can have an overshoot to either side of 25 basis points. But, I don't think you're going to see much outside of that.
It's kind of interesting, too. I use the word kind of putting a floor, and I've heard this from some other guests as well, that given Trump's focus on the stock market, or at least the Dow, that could maybe provide a floor for equities, maybe even in the fixed income space. But of course, he's also put a lot of attention, the big spotlight right now on crypto, $106,000 right now for Bitcoin. A lot of people betting that will go up, not because of any fundamental issue, but because maybe this is an administration, because of its interests, that will keep a floor on that.
Sure. And I think, listen, there's certainly plenty of momentum in behind the crypto markets. You had plenty of support for the Trump campaign as a result of that. So I'm sure you're going to see some supportive measures trying to be pushed through. But, I think some of these big picture items that we keep hearing about, you may want to temper a little bit of those expectations simply because you're probably going to need congressional approval for some of these things that people are talking about. And so there's a difference between Trump sort of snapping his fingers and saying, yes, we can approve some of these measures that are supported for the crypto market. But the flip side is a lot of these are still going to require congressional approval. And there may be a little bit of a difference in regard to how that gets pushed through. But regardless, I think deregulation is the key there, and that's going to be supported for the crypto market in general. All
right, Jack, we got to leave it there. Have a happy holidays. We'll catch up with you in 2025. Jack Janasiewicz, he's portfolio manager and lead portfolio strategist with Natixis Investment Managers Solution. As we count you down to those closing bells, just 2.5 minutes to go, Alex. The NASDAQ 100 at a record high.
A record high 45, if I'm counting correctly, record highs so far.
I hope you're counting correctly, because my whole knowledge of how many record highs is all completely from you.
It's an Excel spreadsheet from Terrell Holt. So if it's wrong, it's his fault. Okay, that's all I'm saying. But you also have the Russell was also outperforming a little bit. Mid caps, though, not doing so well.
Yeah, not so well here. The S&P camped out at 6,070. A full breakdown of all today's market action starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele. We're taking you through that closing bell with a global simulcast. It starts right now. Scarlett Fu wheeled into the TV studio. Carol Masser in the radio booth. Emily Grafeo, it looks like, is in for Tim Stenovic. Tim Stenovic doing his best Carol Masser impersonation today. As we welcome our audiences across all of our platforms, television, radio, and our partnership with YouTube. Carol Masser.
I'm just going to say women ruling today in a big way. Do you feel outnumbered there, Romaine?
Okay. He's fine. Record high, no comment. Record high on the NASDAQ today, Carol Masser, not necessarily for the S&P.
Yeah, a big kind of spread there with the NASDAQ 100 up 1.4% and the S&P 500 only up 0.3%.
It very much feels like we're in a waiting mode, right? I mean, we already know that the Fed is going to cut rates, but it's going to be this hawkish cut. So I guess it really all comes down to how they really put forward that hawkish cut. Will it be in the SEP? Will it be in the communications that Jay Powell gives during the press conference? Get ready. It's going to be exciting.
What is a hawkish cut? I keep hearing this.
I know. I feel like it's something that we all just made up and now we're all going with it.
No, it's legit. It's legit.
It's like you cut, but then you say basically it's a pause. It's basically the Wall Street Journal article from Nick Timrose that said, we could be in the landscape now for a pause or an extended wait and see, and that would in theory be a hawkish cut.
No. Okay.
T-shirts are coming.
Emily, what do you think about this hawkish cut?
Yeah. I mean, they cut, but then they project in the dot plot that maybe there's not going to be a ton of cuts coming in the future. That would be a hawkish cut.
We trust the dot plot again? I forget where we are with this.
I don't trust any. I mean, look, there's like 20 drones flying over us right now that nobody can tell me anything about. Why am I supposed to trust the dot plot? The closing bells here in New York. The closing bells here in New York. And you got green on the screen and reason to clap and cheer. The Dow Jones Industrial Average going to sit this one out, though, down about 100 points or roughly about 2 to 0.3%. The S&P 500 falling short of a record high, but still firmly above 6,000, up 23 points or 0.4%. The NASDAQ Composite and NASDAQ 100 each up more than 1% on the day, two record highs. The NASDAQ 100 up more than 300 points, up 1.5% on the day. And the Russell 2000, look at that, trying to get in on the action as well, up 0.6%.
All right, a little bit of a gain there. If you dig a little bit deeper into the S&P 500, and you've got a majority of names to the downside, 321 names in the S&P 500 losing ground on this Monday, Scarlett, and you've got 182 to the upside.
All right, let's take a look at the IMAP, which shows how the sectors performed on the day. You have 4 sectors in the green. Most of them are all in the tech sphere. So consumer discretionary, which includes, of course, automakers, retailers, and home builders, as well as Tesla, up 1.8%. Communication
is that a tech
services
company or not? Have we settled this?
No. I mean,
Yes
Elon
and
Musk
no.
says it is. 1.3% gain for communication services, and tech as a group up 1%. And industrials just slipping up into the green. As for energy names, they were the big laggards here, and 21 out of 22 energy stocks declining. Texas Pacific Land is the outlier there.
All right, guys, don't judge me, but forgive me because my first gainer was a gainer earlier in the session. I know, here I go.
What happened?
It was up 7%. MicroStrategy. I know you guys, everybody was talking about it earlier on TV. Quite a rally, set to join that NASDAQ 100 index following the benchmark's latest rebalance, but it's finishing the day with like kind of a whimper, just a little bit lower, call it unchanged on the day, down about 0.04%. So, yeah, so much for that. I will say that there have been analysts putting out some notes saying the inclusion of the first Bitcoin-focused company to the index will give indirect exposure to Bitcoin to millions of investors. This is from benchmark analyst Mark Palmer, but apparently not so much enthusiasm by the end of trading today. Micron Technology, though, holding on to its gains. Yay! This is a top gainer in both the NASDAQ 100 and the S&P 500, up 5.6% here at the close today. Reports earnings on Wednesday after the close, set to reveal its strongest adjusted earnings expansion in 7 years. Expansion plans in the cards, too. Keep in mind that Micron this week reached an agreement with the Biden administration to lock in almost $6.2 billion in federal subsidies. So protecting maybe that funding, even though we're going to see a change in the White House, of course, as Donald Trump and team come January. But Micron Technology, again, a standout. And Broadcom, its 2-day gain hitting 38%, adding $324 billion in market cap. So again, up another 11% today, hitting another record high. It's the top gainer in both the S&P and the NASDAQ 100, but this is just playing off of its earnings.
Can I just, since you only had 2 gainers, can I add one to your list here? The quantum computing stocks are just on fire. Like quantum computing up 65%, D-Wave was up 44%, Rigetti was up a tremendous amount as well. Obviously, this has been in the zeitgeist for a while. And then drone makers as well. Our producer put this on my radar. Red Cat Holdings, which I guess is supposed to report earnings later tonight, it was up more than 20%, almost 30% on the day.
Do you want to do the decliners too, Romy?
Oh, wow. Guest host throwing shade.
Okay. All right. Come on. I'm ready.
No, you go. You go, Emily.
Okay.
Well done.
Looking at Ford, down as much as 4.9%. I have 2 single ticker decliners today. They cut their, Jefferies cut its recommendation on the automaker to underperform from hold, citing broad concerns ranging from inventory overhang to looming strategic decisions on the company's European presence. Analysts over at Jefferies said that Ford faces many difficult decisions in upcoming quarters, including resizing, if not exiting Europe, and executing a yet-to-be-announced electrification strategy. I'm also looking at AT&T, that stock down as well. One of the many internet service providers down today after the Supreme Court declined an industry appeal to challenge a New York law that would cap broadband rates for low-income households. So TD Cowen summed this up. They said it's a setback for the telecom companies as the decision preserves states' abilities to regulate prices. We also saw Verizon and Comcast down. That stock down about 3.3%. And finally, more NASDAQ 100 news.
What are those broadband rates?
The rates now?
Yeah.
How much? I'm not sure exactly how much you have to pay or what they wanted to cap.
Do you know?
Do you know, Romaine?
No, that's why I asked you, Emily Grafeo.
Oh my gosh.
This is payback now, Emily.
Yes, this is payback. I definitely deserve this, so I'm regretting my sass a couple minutes ago. But finally, finishing up, SMCI. Supermicrocomputer removed or will be removed from the NASDAQ 100 next week. That stock down 11%, down 60% over the last 6 months. Bad earnings among a lot of other concerns for this company. It's still in the S&P 500 though, but it will be removed from that tech index next week.
Guys, I'm looking at the bond market. It was a whole lot of nothing happening. But remember, this is after last week where you had that bear steepening, particularly in the back end. You saw a meaningful rise in the 10-year yield up by like 20, 25 basis points on the week. And today it was a whole lot of nothing. You have to wonder if we're going to see some positioning after the Fed and just sort of hold where we are into the Fed meeting on Wednesday.
All right, guys, we're going to get to some of the stories that are on our radar. This one is among the most read on the Bloomberg. I think it popped up just a little while ago. And it's basically coming from Morgan Stanley. And basically, they've got an offer for some SpaceX employees who own shares and want to maybe kind of cash in a little bit without losing those shares that have really soared in value. And this has to do, Emily, with their specialized lending program over at Morgan Stanley. Basically, they'll offer some loans.
Right. So to participate in this, the SpaceX employees need at least $500,000 worth of vested SpaceX stock. And this is according to people, I guess, familiar with the matter. And this is all coming after SpaceX is one of the most valuable companies, one of the most valuable private companies in the U.S. A share is now worth up to $185, up from $112 set in the prior valuation. So I guess a lot of employees wanting to tap into that, even if this isn't a public company. This article from Bloomberg News also said that the employees who don't want to part with their equity holdings can turn to margin loans for liquidity.
I wonder how many people qualify, because you need at least $500,000 worth of this vested SpaceX stock. Are we talking about like 400 people, or are we talking about 4 people?
Morgan Stanley and SpaceX not commenting.
Well, there was another report out saying that, I think to Scarlett's point, it is in the hundreds. But haven't we seen that a lot of this? Isn't this been one of the criticisms, is that you have a lot of private companies with these big valuations, and the only way for the employees to really sort of take advantage is through these loans. But of course, then that distorts a lot of things, such as the actual valuation. It distorts local taxes as well. So kind of interesting to see how this has become a big problem, given that these companies have not gone into the public domain.
And the companies don't need to, because they have plenty of funding options, right? I mean, it's no longer go public and expand.
Yeah.
There's plenty of private money to tap. All right, so guys, when we decide to create merch for Bloomberg Television or Bloomberg Business Week, we can now freely use Popeye or Tintin on our merch, because these two characters who first appeared in 1929, their intellectual properties are now public domain, or they will be on January 1st.
That goes back to 1929.
It does.
All right, so the Tintin now, that's boring. I used to like this.
I liked
it. I know, I liked it when I was a kid, but Popeye was, that was like my jam when I was a kid.
No.
Tintin or
Popeye?
No, Tintin was the best, but I think they've been canceled because some of their comics Tintin did not hold well.
There's a lot of racist stuff in there.
Their time,
but
yes.
Honestly, everything written back then is crazy. But yeah, I agree.
Okay, so with our show T-shirts, it's what?
So
Tintin battling Popeye.
But no spinach,
with
right?
Snowy.
No spinach, though, on Popeye. It's the early version of Popeye. So, Romaine, I don't know. Are you a spinach kind of guy?
There's no spinach?
No, apparently it's the early version. Just like, remember with...
You have to wait longer.
Wait, I didn't know the story. So you're saying that Popeye didn't always eat spinach?
Apparently not, the early versions. I think he
So
was
where was
into
all that
ice
strength
cream
coming
and
from?
Chocolate, stuff like that. It's the pre-GLP-1 Popeye.
Now I have to go back and watch. Between, Tintin, who apparently was a bigot, and now Popeye, who was on something other than spinach. I got a lot to learn.
Can we rap?
Well, maybe we don't want 1929
rap.
Popeye.
They're telling you to rap. You're not rapping.
I'm rapping. All right, that is a wrap. Our cross-platform radio,
is
TV,
Tim back
YouTube,
tomorrow,
Bloomberg
or
Originals.
Where is he?
I don't know. We're all going to do something. All right, we will see you. Some of us might see you again. Same time, same place.
All right, see you next year.
Goodbye.
Coming up, we continue our coverage right here on Bloomberg Television. There were some major statements made a little bit earlier today by the president-elect Donald Trump on the heels of a major economic promise from SoftBank's Masayoshi Son. We're going to talk about what this means for the U.S. economy. That's coming up next here on The Close on Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. An interesting day on Wall Street. I think this is going to be kind of it for the year, right? Kind of everybody's just waiting for Wednesday, a big build-up to Jay Powell and the Fed on Wednesday, and then, well, that's pretty much it. And so you have stocks in a bit of a holding pattern. The S&P did flirt with another record high, though did fall just a bit short of that. Still up about 0.4%. The NASDAQ 100 and the NASDAQ Composite up more than 1% on the day, and that did lift them to a record high. And a big part of that is, of course, tech stocks. The Philadelphia Semiconductor Index index higher once again. NASDAQ biotech's higher once again as well. Risk appetite back here with Bitcoin back around that 106 mark, a record high set in the overnight hours. And we haven't had a chance to talk about cocoa prices, Scarlett, but close your ears. This is shaping up to be the strongest year for cocoa prices since at least the early 2000s, up another 5% on the day.
Yeah, I'm sad about that because it means all my chocolate's going to get a lot more expensive starting next year. All right, let's take a look at some of the day's big movers. Romain mentioned the record highs in the NASDAQ 100. A lot of that fueled by Broadcom, up 11% on the day. No specific news here beyond Goldman Sachs raising its price target for the chip maker to $240 from $190. With the analysts, they're saying they have higher conviction in the company's outlook. Remember, just last week, Broadcom gave a good forecast for sales of its AI-related products. FX side, the ETF that tracks big-cap Chinese stocks losing 1.6% on the day. This is on disappointment that Chinese retail sales rose less than expected, and that, of course, follows Beijing's failure to really follow up its promise of more fiscal stimulus with anything substantive or really targeted to what investors have been hoping for. Romain?
All right, we want to turn to the world of politics. We heard from the president-elect earlier today, Donald Trump, standing next to Masayoshi's son's it's SoftBank's Masayoshi son, announcing plans for SoftBank to invest $100 billion in the U.S. over the next 4 years. Now, Masayoshi's son made the announcement where he expressed optimism about the U.S. economy and confidence in Trump's leadership. Kailey Leinz is the co-host of Bloomberg Balance of Power, and she joins us right now to talk a little bit more about this. There have been rumors about this for a while, and of course, Masayoshi's son, certainly no stranger to big investments here in the U.S. What's the connection, though, between him and Trump?
Well, we already saw this playbook in some way in 2016, almost exactly 8 years ago. In December of that year, Romain, Masayoshi's son, pledged that SoftBank would invest $50 billion in the U.S. and along with it, introduce 50,000 new jobs. The money did ultimately come. It's unclear exactly if the job tabulation ultimately reached that figure. But now, of course, what he's promising is double that, $100 billion to invest in things like AI infrastructure, and 100,000 jobs could come with that. Now, at the news conference today between Trump and Masayoshi's son, which of course took place at his Mar-a-Lago resort, Trump kind of joked and said, actually, why don't you make it $200 billion? Son said, I really will try. But we should point out that SoftBank doesn't yet even have the $100 billion they're promising to spend over the next 4 years. According to their latest filing, they only have about $30 billion on hand. So some kind of fundraising would likely need to happen here in order for it to actually make these investments. But obviously, for the incoming president-elect, this is a pretty big win, as it could deliver an economic boost to this country, which, of course, was one of his many campaign promises.
Yeah, and Kelly, put this into context, too, as well, because Masayoshi's son coming in here with this big pledge, $100 billion, is certainly grabbing everyone's attention. But other tech CEOs have also been trying to, well, let's just say curry favor with President-elect Trump, donating money to his inauguration fund. So this is all kind of part and parcel with that.
Yeah, you're absolutely right, Scarlett. I would also point out this news on a $100 billion investment comes just about a week after Donald Trump took to Truth Social, saying that anyone who invests $1 billion in the U.S. would get expedited permits and basically an easier regulatory burden. So we do have a question on timing here and how much this $100 billion will mean easier regulatory approvals. But yes, you're right in that it's not just Masayoshi's son. We've seen going to Mar-a-Lago. Tim Cook was just there on Friday. Donald Trump did talk about that in the press conference today, in which he said that they're all coming, referring to all of these big tech executives. Mark Zuckerberg, of course, has already come to dine with the president-elect. Jeff Bezos is expected to do so this week, tomorrow. And, of course, these companies, Amazon, Meta, now OpenAI, and Sam Altman, have donated $1 million each to Trump's inaugural fund. And Trump described all of this as being very different from his first term. Speaking at Mar-a-Lago earlier today, he said in the first term, everyone was fighting. Now everybody wants to be his friend, he says.
All right, Kailey Leinz, fantastic wrap up there. Kailey Leinz is co-host of Bloomberg Balance of Power, and you can catch her and Joe Matthew at the top of the next hour. For more on politics, geopolitics, we want to bring in Courtney Rickert McCaffrey. She is Global Geostrategy Insights Leader at EY. Courtney, it's good to speak with you. This idea of tech CEOs trying to curry favor or bend the knee to President-elect Trump to not incur his wrath and, kind of get on his good side. To what extent is this the playbook for other countries? I mean, leaders of other countries have no choice but to do this as well?
Yeah, well, thank you for having me. And I think this is really interesting because it embodies a few of the top themes in our 2025 geostrategic outlook. One of which being the focus from elections in 2024. We saw, elections take place in so many markets around the world, as you rightly point out, not just in the U.S. but that focus from elections to really governing and putting in place new policies, new regulations, or removing regulations in some cases, as the case may be. But essentially what we're seeing is, business leaders around the world trying to figure out what these new or incoming governments are likely to do, what their priorities are likely to be, and how they can sort of position in that new environment.
Yeah, governing is clearly messy, and we see that just with what's going on in Canada. The unexpected departure of Canada's Finance Minister, Chrystia Freeland, today, reportedly over disagreements with her boss, Prime Minister Justin Trudeau, over how to respond to U.S. policies. Putting aside what this might say about Trudeau's standing within his own party, within Canada, this is kind of a stark reminder of how Trump's election is forcing other countries to scramble their playbook in kind of responding in catching up, I guess.
Yeah, I mean, the election or, re-election of Donald Trump is certainly a catalyst for a lot of the political change that we're seeing in the U.S. as well as around the world. But it is broader than that. Even Trump's re-election is part of, as I mentioned, that sort of global wave of elections. And throughout the course of 2024 and likely into some of these new elections that we'll be having in 2025, including in Canada, we've seen a real emphasis among voters on sort of anti-establishment, anti-incumbent candidates. So trying to seek alternative candidates or alternative parties to the ones who are currently in power, because a lot of voters around the world seem to think that they want something different out of their governments. They want new policies, new approaches to some of the problems that they're facing.
Yeah, obviously we saw that play out here in November. We saw that play out, of course, over the last few weeks in Europe and France and Germany, and even now, of course, in Canada, as Scarlett referenced. I guess the big question, though, Courtney, is what is the symbiosis amongst these world leaders right now? I mean, it's a totally different environment than maybe where we were 8 to 16 years ago when it comes to the global stage. Is there going to be cooperation amongst these leaders or just infighting?
Well, it'll probably be a bit of both. But at a high level, we definitely see over the course of the last decade or so, as you point out, even the last 5 or so years, this real sort of shift from an era in which geopolitics was more characterized by cooperation and sort of working together to one that's more characterized by competition and even conflict, obviously, in some cases. So there has been a shift in the geopolitical environment at sort of the global level, where we're seeing less cooperation, although it still does happen in some areas, of course. It's getting harder and harder to achieve sort of international consensus on a lot of the issues that countries are facing, just because we're seeing all these disparate political leaders trying to satisfy their domestic audiences, of course. And then there's a lot of, just geopolitical rivalries and competition kind of baked into the system now.
Where's the sphere of influence going to end up, Courtney? I mean, that's been a big question for investors right now, trying to gauge.
Sphere of influence?
Yes.
Well, I think, what we're seeing is governments, certainly here in the U.S., probably in many other markets around the world, really focusing on sort of competing in, strategic sectors that, they think are critical for their national security, for their international economic competitiveness going forward. So where we're likely to see a lot of that, really play out is in digital technologies. You were mentioning AI earlier in the program. I think that's a clear area where we're going to continue to see competition and continue to see government action in how business kind of is able to operate. Another key area is around climate technologies. We've obviously seen a huge focus on electric vehicles the past year or so. Some of the other climate technologies as well are likely to remain pretty high on the agenda, in addition to, of course, aerospace and defense and critical infrastructure and all those sort of more traditional strategic sectors.
You mentioned competition and conflict among countries will mark the next couple of years, in contrast to the cooperation we might have seen before during this period of intense globalization. What does that mean for companies that operate comfortably across national borders, especially those that are based outside the U.S. but rely on U.S. consumers and U.S. customers?
Yeah, this has been a huge shift for a lot of companies, and it's ongoing. Although I think most companies going into 2025 are not starting from scratch here. So what we've seen is, a huge emphasis on diversifying supply chains, diversifying suppliers, setting up shop in new markets, these so-called connector economies, which are, emerging markets that kind of have, economic and geopolitical relations with all the major powers around the world. So that's been a big shift. It does create some risks, of course, in addition to those opportunities of maybe seeking lower cost suppliers or just more geopolitically resilient suppliers. But of course, when you're diversifying your markets or the countries in which your supply chain is, that doesn't necessarily mean that you're diversifying sort of the nationality of those products. And so that's something that we think will become a bigger focus in 2025.
Right.
Companies trying to get a bigger handle on not only where their supply chains are located, but which companies are involved in their supply chain.
All right, Courtney, appreciate your joining us. Courtney Rickert McCaffrey is Global Geostrategy Insights Leader over at EY. Coming up, we've got the top three, where we focused on the top three movers and shakers at the center of the day's big stories. This is The Close on Bloomberg. Time now for the top three, where we name drop the people driving some of the day's most talked about stories. And first up is Ken Leach, the former co-CIO at Western Asset Management Co., also known as WAMCO. He has pleaded not guilty to fraud charges in federal court in New York. He's been accused of steering more than $600 million in gains to favored clients while forcing losses on others, basically cherry picking trades so he can maximize his revenue.
Yeah, and he, of course, in the courthouse, you see him there. $10 million bond. He was granted bail on that, turning over his passport, as is commonplace in this situation. And now we all kind of have to wait for the spectacle of this trial.
And it'll be a spectacle.
All right, someone I'm keeping an eye on is the new Chief Growth Officer at Starbucks. In fact, the first ever Chief Growth Officer for Starbucks in China, I should say, to be specific. His name is Tony Yang. He's been on the board since last month, but he's got a long history in China. As you know, Starbucks had a big presence in China. Mm-hmm. They kind of fell by the wayside, some competition and some missteps there. But they think Yang could kind of bring this back.
Yeah, and this is all part of Brian Niccol, the new CEO of Starbucks overall, his remit to turn Starbucks around. And of course, Yang's first task will be to collaborate with entertainment brands and pop culture names to directly appeal to Chinese consumers. So I thought that was kind
of funny, right? So this is going to be like Happy Meals with the toys, but the Starbucks version of that?
Yeah.
Okay.
You got to appeal to the local audience.
Okay, we'll see how that works. I mean, if it works, great for him, right?
And also, by the way, Brian Niccol is also making some changes at Starbucks in the U.S., too. He's extending paid parental leave for Starbucks employees, 3 times what it currently is. They can now get, I think, 18 weeks of paid leave for whoever gives birth. And then for the other parent who doesn't give birth, they get 12 weeks paid leave.
Yeah.
All right. Third on the docket here is the artistic director of Hermes, who told 60 Minutes that the brand's $10,000 bags are not expensive. Instead, Pierre-Alexis Dumas called them costly.
Costly. Well, that's certain fair. It was an interesting interview. I mean, of course, he kind of goes through the difference of being expensive. Expensive basically just means it costs a lot. Costly means that there's some real value there and that it's worth it. And he goes into this idea. They're not sort of creating scarcity, because that's always been the sort of the conspiracy theory.
Except they do.
Is there? Well, not according to him. Scarlet Fu. How many Birkin bags do you own?
I own 0.
Okay. Well, we got to work on that. Not with my money, but with somebody else's money.
We'll work on that.
When we return, we're going to take a look back in history and at Henry Blodgett, Jeff Bezos, and a bold sell-side call on the future of Amazon that launched and torpedoed a career. All right, let's take a quick look back at history. This day, back in 1998, Henry Blodgett, remember him? He made one of the boldest calls ever by a stock analyst on Wall Street, a bet that an unprofitable online bookseller named Amazon.com could almost double its stock price within a year. It was laughable. Amazon, which at the time was refusing to provide investors with sales guidance, was pulling in just around $154 million in quarterly revenue and had never even posted a profit. In fact, investors, they were paying about $165 for every dollar the company had lost in the prior 12 months. But Blodgett, he saw a path where the company, within just 5 years, could generate revenue of $10 billion and be profitable as it expanded its product lines to include videos and personal electronics. As a result, he raised his price target, saying the stock, then trading around $240, could reach $400 within 12 months. The stock reached that level in just 3 weeks. It became a career-defining call that earned Blodgett the moniker King Henry and set him on a path to fame and fortune. Merrill Lynch in 1999 lured him away from Oppenheimer with a $5 million pay package and sent him around the country to pitch investors and underwriting clients, logging at least 80 TV appearances alone that year. At least that's according to the book Blood on the Street, which chronicled the highs and lows of Wall Street's internet stock craze. But as with most ascents, Blodgett would fly just a little bit too close to the sun. A Bloomberg analysis shows almost every stock he covered back then, he recommended buying. Advice that backfired when the internet bubble did finally pop. He would lose his job at Merrill in 2001, and 2 years later, when emails surfaced of him deriding some of the very stocks he was recommending, government regulators pursued fraud charges and ultimately barred him from ever working in the securities industry again. Blodgett, though, always colorful, if not always elusive, landed on his feet, first penning newspaper columns, then starting a consulting firm, and then launching a media empire around the news site Business Insider. And through 7 rounds of VC funding, you know who one of his biggest, earliest, and repeat backers was for that media empire? None other than Amazon founder Jeff Bezos himself. Scarlett?
Well done, well done. And of course, making a name for themselves, there's another group that's trying to do something similar, hoping to make a name for itself with the backing of some key big-name investors. It's the National Thoroughbred League. NTL is a first-of-its-kind horse racing league where 10 teams across the U.S. accumulate points through team-style races. Some key backers include country music star Tanya Tucker, rappers Rick Ross and Nelly, and NBA legend Dr. J, Julius Erving. We're happy to have Julius Erving with us now, as well as NTL co-founder Randall Lane. Gentlemen, welcome to The Close. And Dr. J, I got to start with you because you're a legend in the NBA, of course, Philadelphia 76er, the king of slam dunks. How did you first get involved in horse racing and specifically the National Thoroughbred League?
Well, you know, I've been out of basketball for a long time, and I've explored other activities, golf being one of them, and it's probably my main post-basketball activity. But I have a history of going to the Kentucky Derby on the invite of Junior Bridgman for about a dozen times, and they've even let me start the race. So that's kind of a big deal. I grew up in Long Island. You know, there's Belmont Park near there, and there are plenty of racetracks in and around New York. So I always heard about racing. And I actually came from a community called Roosevelt, and there's a Roosevelt Raceway right there in Long Island as well. So this was probably my destiny. And when I had this conversation with Randall a couple of months ago, my son and I and a friend of his, you know, all decided that we wanted in.
Got it. Well, it sounds like you said, that this was destined to happen at some point. Randall, I want to bring you into the conversation because NTL brings team competition to one of America's oldest sports. And the intention is to make horse racing more like track meets. What are the benefits of a team format? Because Dr. J mentioned golf. I know golf is doing something similar with the TGL, using a team format rather than individual players.
Sure. Well, it's really taking what's one of America's great, not just one of America's great sports, one of America's great cultural institutions, and taking what works in modern sports, which is, you know, right now you go to a track, you don't even know, unless you're betting on the horse, you don't even know the name of the horse you're betting on. And what we want to do is take what's working in every other sport and creating tremendous wealth in every other sport and bring that to thoroughbred racing, which is a great, amazing sport, but it needs teams to root for, it needs stars, and then we need more events. You know, I think our parallel is Formula One, which is a circuit that's going around with teams racing against each other, and you root for the drivers, and you root for the teams, and you know who you're rooting for. But it has that similar spectacle. I mean, 150,000 people go to the Kentucky Derby. There are just not enough of those right now. And so what we're bringing is that kind of mini Kentucky Derbies with teams that you root for, teams that you know, and stars that come back and race time after time instead of going out to stud. So we're trying to build stars teams through basics of what works in sports economics.
It's interesting that you use the Formula One as an example, because that's brought a lot of people into the fold for Indy racing that didn't necessarily exist in the past. And I am curious, we talk about horse racing. You know, I grew up in a family where, you know, I had some uncles that were really into this. I never really got into it. It always seemed so complicated to me. And I wonder, with with this team format as well as some of the other initiatives you're taking, like this event you're having in Phoenix, where you're actually going to color the track in the colors of Boise State. If that is an attempt to bring in, I guess, sort of those novices, those people who wouldn't normally gravitate to horse racing, but the spectacle may bring them in.
Absolutely, man. And if you think about it, Formula One has become, $20+ billion phenomenon, just the main company, based on these events. The sport itself, respectfully, there's not a lot of passing. You only get to see a little part of the track. Horse racing is exciting. There's a reason they call the Kentucky Derby the most exciting 2 minutes in sports. It's exciting. The athletes are noble. They're beautiful. Mm-hmm. And what we want to do is bring that. And you said it exactly right. We want to make it easy. Root for a team as opposed to the 7-2 odds on the 4-horse and the exact. Make it easy to root for the teams. Make it easy to bet on the races. Make it easy to have a great time with families and friends hanging out. In the way that Kentucky Derby does it once a year, and Formula One does it 20 times a year.
Well, I am curious, Doc. Go ahead.
In life, a rush is something that generally lasts for seconds, but in a horse race, there's a full 2 minutes of rush, especially if you've made a bet, especially if you know the horse, the jockey, if you're invested in it. So there's the physical investment of making a bet, and then there's the emotional investment of putting your heart into it and putting your heart on the line. Yeah. And that's pretty special for a couple of minutes.
Yeah, absolutely, too. And I am curious, Doc, if you can kind of maybe, are there any parallels to kind of what we saw back in the old basketball days? I mean, obviously we all remember you from the Sixers, but there are people of a certain generation that remember you from the ABA. And the ABA did things for basketball that have now basically become the de facto standard. It was a more exciting league, at least for those of us who are old enough to remember it. And I am curious about how sports leagues position themselves in staying true to, I guess, the traditions of that sport, but at the same time doing more creative things, Doc, to drive people into the stands or into TV viewership.
Well, you have a lot of people on the ownership side and the employees of the owners who, at the end of each season, they sit down and they do an evaluation. Well, what are we going to change? Because sports is in a constant state of change, and some people like the changes, some people don't like the changes, but there's going to be change, and it's better if you have a say-so. So, I think fans should have always been verbal and vocal in terms of, the social media presence. They got an opinion about different players, and sometimes players fire back. So it's moving forward, and this NTL is just a step in moving horse racing forward, and not just in the U.S., but globally.
Dr. J, you're almost synonymous with the city of Philadelphia. You've done so much for the city, and I know that the city hosted the October 19th Philadelphia Cup not so long ago. What was that like? Take us through how the city embraced this new team sport, which perhaps some of the more casual fans had never heard of, certainly never seen displayed in this way.
Well, one thing, it was at Parks Casino and Raceway, and I've been there a couple of times in my Philadelphia career. I live in Atlanta, Georgia, so when I got to Philly, I could feel the buzz associated with the race, and what the crowd were expecting about 2,000 people, got 4,000. So the number speaks for itself, and you had people there who, many of them dressed like they do at the Kentucky Derby, the ladies with the bonnets, guys with the slick suits, and people just wanted to be seen. I mean, the horses are one thing. You're going to see the horses. You look to your left and look to your right, and you see people who are excited to be there, and they're showing off their stuff. And Philly's one of those cities that has a lot of pride in how they look at public events, and that was one of them. That was a really, really nice event.
Yeah, people wanted to be seen, and that was certainly a place to do it. Thank you so much, gentlemen. NBA legend Julius Erving, better known as Dr. J, and Randall Lane, co-founder of the National Thoroughbred League. Thank you both so much. I don't know. I've never been into horse racing, but I can get behind a team concept because before it seemed so complicated. I would only pick whichever horse sounded, like it was a good name.
Yeah, I mean, I don't gamble, but I mean, I've been to several races, and they could be a little stated. And if you're not kind of in the know on what to do, it's a little kind of confusing.
There's a whole language to it.
Yeah, but if you can make it more of an event, and like I said, you do have that. I mean, but it's mainly the big derbies, the Kentucky Derby, Preakness, and those types of things. But beyond that, the day-to-day ones just aren't all that exciting. Can I just say that? I mean, I'm sure I'll get in trouble for saying that, but so if you bring something like this to, even coloring the track, it seems kind of like a gimmick, but that draws people in.
It does.
People want to have more fun.
And they want to be able to rally around something, a city, for instance, like the Philadelphia team or the New York team.
Root for it, and not just root for I don't know, Bob Baffert or whoever. I mean, no offense, but
All right, so we'll see you at the track then, right?
I will.
Okay, let's also just give you a quick recap of what happened in the markets today. Felt like kind of a humdrum day, even though we did see gains. The Nasdaq 100 closing at a record high, up 1.5%. Very much holding pattern until we get to the Fed decision on Wednesday. Yeah. Bitcoin having a banner day, though.
Yeah, I mean, we talk about the equity market, and we talk about this idea kind of what the catalysts are for what is basically the last 2 weeks of the year. And you've really got nothing, right? I mean, you got a Fed meeting that we are pretty much widely expected to know what we're going to get, so unless there's a surprise there. And you have a few earnings that maybe could move the needle, like FedEx and Nike, but beyond that, and a PCE data at the end of the week. But I think a lot of folks have checked out, Scarlett.
Well, and that's why the 2-year yield, not much is happening there. Bloomberg Dollar Index, also not much happening there.
All right.
Oh, by the way, we have a special tease here because we put together, or not we, the good folks at Shutterfly put together this holiday card. Have you seen this?
I have seen this card. In fact, I've sent it to all my friends and family. So this is good. I mean, this is the deep tease here. We're going to talk to the CEO of Shutterfly coming up after the break here. The happiest of holidays. Look at those 3 people.
I know.
I mean, those got to be.
We needed bigger smiles for that one. You're smiling.
The problem is that we didn't actually take this photo specifically for the card. So we thought we were being serious journalists. Yeah. And little did we know this would become our Christmas card.
This was, best wishes, Happy New Year, all of that. We're going to talk about consumer trends and insights that the CEO of Shutterfly is seeing during one of their busiest times of the year. This is The Close on Bloomberg. Happy holidays. Most of us have been getting holiday cards in our mailboxes for a few weeks now, but the rush is not yet over. Holiday cards are a beloved tradition by many around the world to reconnect with loved ones and spread cheer. And this year, more than half of American households will receive a card from Shutterfly. I'm pleased to say we're now joined by Shutterfly's CEO, Sally Pofcher. Sally, so good to speak with you in what I know is a busy period for you over at Shutterfly. Can you give me a sense of how big this market is of people who do send holiday cards to each other, and to what extent it's been growing the last couple of years?
Yes, it's been growing every year. As you said, that really with Snapfish and Shutterfly combined, we will produce over 200 million cards this holiday season. We are the market leader. There are other players, but this season in Q4 is really significant because the meaning of a holiday card in terms of connection and sharing the story of your year is really significant for a lot of families, combined with personalized gifts in total. So we'll sell over 2 million ornaments as well as photo books that recap the year or a significant vacation.
And when we say holiday
cards, the numbers even on this page, they're larger than that page because we are also Tiny Prints and Snapfish.
Ah, yes, that's right. There's a lot of different imprints, a lot of different brands under Shutterfly. That's a really good point. So when we talk about holiday cards, how many of them are, say, Christmas cards versus New Year's cards versus, for procrastinators like myself, Lunar New Year cards, which gives me an extra month or so?
That's a brilliant point, really, because Christmas and holiday is generally split, but I think it's a bigger deal, and we saw this last year, that we saw a 30% increase in New Year's cards on our peak day. And that's because, as much has been said about this shortened holiday season, increasingly with, Thanksgiving be later and the shipping time. And really, it's often the same person in the household that is buying all the gifts and planning the holiday festivities with all that pressure in terms of sending out a holiday card. So we see and we anticipate this year a lot of growth in New Year's cards. And it makes a lot of sense in terms of the pressure, in terms of who's sending it, but also the importance of connection and community, which is why people send the cards.
What's sort of the uptake once you get beyond the holidays, Sally, in terms of people using the site, and what do they use it for outside of the holiday seasons?
Well, the average consumer's got like 3,000 photos on their phone. And what we see quite often year round is photo books, prints, gifts of any sort, as well as, graduation cards, Mother's Day cards, announcements, weddings. So there's uses all year round, and we most significantly see a lot of growth in photo books as people capture either a month in the life or birthday parties or trips as regular milestones, not just year in review books.
I am curious, and maybe you can settle a debate for me. So, obviously, we all take pictures now, pretty much using our phones, more or less. So basically, everything's digital. And there's this big debate as, how much of that do you transfer to physical, physical books or individual photos of some sort? All our offspring in the years and decades to come can be able to leaf through it and not have to look through it a thumb drive for what I'm going for here. Do you find that people are doing that in mass, or are they content to leave the stuff either online or on their computers?
I think the growth in photo books is materially because people have to curate from the massive number of photos and the joy people have in going through photo books. I mean, many people with kids say that's their favorite gift every year because the kids go through photo books repeatedly. And these are the items people tell us, and we hear these stories every day if there's a fire in the house that people grab and carry out. Not because they exist in a digital archive, and it's more the curation of the favorite images. Yeah. And you look around your house, you see the pictures of your favorite events and milestone moments, and those are the things that you frame, or those are the jokes that you put into a mug or an ornament on a tree of a new child or an engagement.
Are young people, though, embracing this? I know, people like me see the value in having these things printed out, but are the younger folks, people in their 20s, are they still doing it as well?
Interestingly, we did this survey. 2/3 of adults prefer physical cards and that includes Gen Z and millennials, but also what we're seeing is photo books are becoming a routine of young mothers as they codify and curate off of their phone those life moments. And increasingly, we see an expectation, and we service that with AI-supported tools of helping creation be easier in terms of how to make a photo book really quickly and do that layout work more easily. But what we see is, in fact, is quite driven by a younger generation of early formation families trying to curate from the massive amount of imagery into those that matter the most.
And I'm so glad you brought up AI, because I'm curious in terms of how AI can innovate the next products that you are featuring. You talked about personalized gifts, whether it's an ornament or something else, but what can AI do in terms of the next item that you create for people to create these personalized mementos?
We see AI as, most importantly, that photo book that just is flashing on the screen is easing the creation journey. A lot of what impedes someone from making a photo book or creating a card is the endeavor of actually doing the layout and the selection of the best photos, or the cropping of that photo, or the captions. And we have 24-hour free design service that is entirely aided by AI to do the first draft of the layout. We have AI-supported caption writing, and for those customers that use that, it is massively transformative to their conversion rate. We have Magic Writer, where people input the text and it translates that into a sort of a more succinct articulation of their holiday message. We have Photo Enhancement, where the imagery, if your border has a garbage can in it or something extraneous, that can be cropped out. So there's many ways this helps improve your photo outcome and eases the creation path. So a lot about it is making it easier for people to achieve what they want.
All right, Sally, really interesting stuff, and wishing you the best of luck and wishing you the best holiday season. Sally Pofcher there is the CEO of Shutterfly.
What was your favorite holiday card that you've sent out with your family?
I mean, ours are pretty basic. I mean, it's basically just us, frolicking in the park or
you're all wearing white. You're jumping on the beach.
No, we don't do the matching thing. I've been trying to get my wife to do the matching thing. She thinks it's corny. So
interesting that you're the one pushing for the matching thing.
But one day, I know. I think we should all get like matching tracksuits, like most normal families do, and spread the holiday cheer in exactly the way that Daryl McDaniels would have wanted us to.
I love it. I can't wait to get this card.
All right, we're going to set you up for what to watch over the next 24 hours. Stick with us. This is Bloomberg. As we wrap up kind of a mad day in markets, things could actually heat up over the next few days. Let's start off with the next 24 hours, and we're going to start in the UK, of all places, where we're going to get some labor market data.
We're going to get jobs coming out at 2 a.m. Whether this moves the British pound remains to be seen, but it's all kind of a drumbeat to the big economic data point of the day.
And the big economic data point is going to be back here in the U.S., and that is retail sales. I'm actually really curious about this to see how things have actually held up.
Yeah, right now economists are looking for a 0.6% gain, but we know there's been a lot of marketing by retailers to try to get people to buy things before tariffs kick in and prices go up.
Are you stockpiling things?
I'm not, but I've seen a lot of people talk about this.
I've seen a lot of people talk about it. I don't know when actually is doing it, which I guess is a good thing, because don't do that, please. We also get industrial production data. I know there's been a lot of talk about we're not a manufacturing economy anymore. It does still matter.
It does still matter, and we're expecting an increase of 0.3%, which is a bounce back from a drop of 0.3% the prior month.
All right, that's at 9:15 Eastern time. At about 3:15 p.m., right in the middle of the close, we're supposed to hear from the SpaceX president and COO about the future of our U.S. Space Force.
And it's not Elon Musk, of course. It's Gwynne Shotwell who will be talking about this at a conference in Washington.
All right, we'll keep you up to date on all of that. Appreciate you watching us here on The Close, Scarlett and I. We will be back tomorrow for all of your market coverage, including that beautiful, beautiful SpaceX rocket. If you want your politics coverage, stick around. Kailey and Joe are up next at the top of the hour with Balance of Power.